Hello, welcome to the European Open Briefing for Tuesday, February the 7th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we have a dollar slightly steadier today after hitting a fresh 10-week low against the yen. The dollar versus the yen is facing continued downwards pressure, mainly on what's happening with Donald Trump's policies, and of course the markets paring back their expectations of a March rate hike by the Fed. Although the yen is also broadly higher on overall risk-off sentiment today, mainly due to the political uncertainty in Europe, and we of course have the French elections coming up. We've got some developments there, and that sent the euro tumbling to one-week low. The pound is also struggling after MPs rejected pro-European amendment to the Brexit bill. In other news, the RBA held rates at 1.5% earlier today, and it gave an upbeat assessment on growth and inflation for the Australian economy, although the Aussie only received a very minor boost from that statement. The Kiwi, on the other hand, hit a 3-month high today, and this is after the Reserve Bank of New Zealand published a survey showing rising inflation expectations in the country. So let's start with the dollar-yen pair. We can see the dollar has been on a downtrend against the yen. It's currently trading just below 112 yen level. Earlier it hit a 10-week low of 111.57 yen. We had some comments by Philadelphia Fed President Patrick Harker, who said March should be considered as a potential for another 25 basis point increase, although this had little impact on the dollar. And the overall market view is that we're unlikely to see a rate hike before June, despite those comments by Hark and also other Fed officials also keeping March as a live meeting. The dollar index, though, is firmer today despite those continued falls against the yen, and that's mainly because the euro and the pound are also falling. Those are offsetting the dollar's fall against the yen. So let's move on now to the euro, because the euro is down sharply against both the dollar and the yen. On Sunday, the far-right leader Marine Le Pen launched her presidential campaign, and she's seeing continued strong support in the polls. And her main opponent, Francois Fillon, he's fighting corruption charges, and the fact that that may hurt his chances of winning the election, and the fact that Marine Le Pen is continuing seeing good support. So all of that is upsetting the markets on fears that she may win the French presidential elections in April and May. And the reason for market concerns is because Le Pen wants to take France out of the euro, and she also wants to hold a referendum to leave the European Union as well. And of course, we also have elections coming up in Netherlands and Germany as well. So all of that is hurting the euro, which hit a 1-week low of $1.0676. The pound here we can see also not doing too well. It was holding up reasonably well until this morning. It just slumped to around 1.2350 to a 2.5-week low, and this comes after the MPs rejected some amendments to the Brexit bill, which were proposed by pro-European MPs. One of the amendments was for the government to have to report back to Parliament every 2 months to give an update on the Brexit negotiations. Another one was for the devolved governments of Scotland, Wales and Northern Ireland to be consulted before any final deal is reached. All of those are seen that they would have helped avoid a hard Brexit. The fact that that bill has now been defeated has hurt the pound, because it means MPs will have less of a say on certain aspects of the negotiations. Moving on to the Aussie and the Kiwi now. We had some fairly positive news for both currencies, although both of the gains were short-lived. The Aussie is currently trading down 0.4% against the US dollar, while the Kiwi is down slightly at 0.1%. The RBA, the Reserve Bank of Australia, held rates at 1.5% at its first meeting of the year. It said in its statement that third quarter contraction in GDP was temporary, and it expects inflation to rise to 2% in 2017 and growth to be around 3% over the next 2 years. So that's fairly positive, but of course the risk-off sentiment in the markets meant that the initial gains from that statement was short-lived. The same is true for the New Zealand dollar. The Reserve Bank of New Zealand, they're due to meet on Thursday. They will also hold their first policy meeting of the year, and today they published the inflation expectations survey, which showed both 1-year and 2-year inflation expectations by the public rising in the latest quarter. So that did boost the Kiwi to a 3-month high of 0.7375, although it's come off those highs at its in the last trading round 0.7310. Coming up later in the day, though, we've got the bi-weekly dairy auction, so that should be eyed for Kiwi traders. Before we go, let's have a quick look at the commodities. Gold reached a near 3 months high, $1,235 on that risk-off sentiment. It's down a little bit today due to profit taking, but of course, given the uncertainty both in the US and in Europe, gold will likely see continued strong demand. Oil has been fairly volatile. It fell sharply around 1.5% yesterday. That was on fears of that rising output will offset the cuts being made by that agreement between OPEC and non-OPEC countries. Although today it's recovered a little bit from those lows. The US crude was last trading just below $53 a barrel. Looking at today's economic calendar, we did have some German data. Industrial output slumped by 3% in December. That had limited reaction in the markets. Of course, the main attention now is on the French elections. We've got the dairy auctions coming up later. And in the US session, we've got Canadian building permits trade data, the IV PMI survey as well. And for the US data, we don't have too many major data. It's just job openings that will likely get the most attention. That's it from me. Thank you very much for watching, and have a great day.